Welcome to In the Balance, the podcast to help you build your dream team of experts to make your financial goals a reality.
Oh, good day. How you going? Phil Tarrant. I am the host or co-host of In the Balance, podcast where we lift the lid, get behind what's happening financially with most people's wealth creating endeavours. I'd like to throw myself into that same bucket, and this is something, as you know, if you've been tuning in this for a little while, I worked on my co-host for quite some time, Munzurul Khan, to come into this and launch this. Most of you would have heard of him. He's well known within property circles, and he's also my accountant I use for my wealth creation journey. And what we do is look at all the different aspects of investing in property and wealth creation. And we've gone through a series of discussions with a whole bunch of different people over the last few months who are all part of that inverted commas supply chain of wealth creation, financial planners, mortgage brokers, finance experts, and accountants themselves. So we're going to continue that discussion as we move into 2025, especially as we gear up for what looks like is going to be a period of reducing interest rates. And I know a lot of people are excited who invest in property and they see a lot of opportunities. So we'll unpack that over the coming months as we try and get some sense to it. But today I wanted to pose an idea, and I've been thinking about this for a little while. And whether or not it's a thing or not, I'm not too sure. So we're going to uncover that today. I might be completely off the mark, or I might be spot on with this. And I think it's probably more of a discussion for sophisticated property investors who have been at this for a little while. Maybe a whole bunch of people who already use KHI Partners as their accounting partner, or other people who are actually investing in property all over the place. But one thing that's become clear to me as I've had this discussion with Munzurul over the last few months is that the best property investors I know and the best people I know who are embarked on a wealth creation journey, leveraging property and other asset classes, think of it as a business. It's the only way you can really, truly be successful. You need to think like a business owner, a business operator, as a small business provider potentially. The business that you're in is the provision of rental accommodation, whether it's for residential or commercial purposes. You need to be a business owner, and that's how you do it really, really well. So we're going to go down that pathway today, thinking of your property investment endeavours as a business, number one. But number two, and this is the idea I really want to challenge today, is that when do you need a CFO for your property investment portfolio? Munzurul Khan, how are you going? You well?
Very good. Thank you very much. Thank you for having us.
No problem at all. And we'll introduce our guest in a moment, Munzurul. But this idea that I've got, all good businesses in some capacity have a CFO. It's a very important function of business. If you look at most businesses in Australia, you'll see some common themes, particularly if you look at large organisations and leadership positions. Normally, the CEO comes from mainly three disciplines. Number one, accounting. Number two, law. Or number three, sales. Sure. And they're normally where most CFOs come out of. And depending on the business itself will be determining who the CFO is and what their skill set or background comes from. But this idea of, do you need a CFO for your property portfolio? Is it a thing? Is it just some harebrained cockable idea I've come up overnight while I've been thinking about this podcast? Or, is that how most property investors view the world? They need a good CFO operating their property portfolio, particularly one that's growing and evolving.
That's right. I mean, the investment world is becoming more and more sophisticated, right? I still remember that many years ago, that when I read that book from Jan Summers for the first time in More Wealth and 101 Stories, right? It was an investment vehicle and investment time that we had at that stage. But we look back after, say, 20 odd years and we say that things have become so much more sophisticated. People tend to be buying a lot more number of properties as such. The transaction seems to be a little bit quicker as such, right? Finances are becoming a lot more sophisticated as such. Your cash flows are becoming more and more important. So that old traditional way of saying it is that you buy an investment and you sort of invest it, leave it on the side of it, forget it. That's sort of not the modern way of doing it, right? The modern way is that you need to be on top of the property investment. Your P&L, your balance sheet, and your cash flow side of it with the property side of it. How is it looking with the property? Is it positive cash flow? Is it negative cash flow? Is it making profit from a cash flow wise, right? And how is the value? Is the value being growing? And how are we comparing with the level of the loan against it? What are the strategies involved? So all of those things are the attributes of the traditional CFOs, right? And I've got this one large client as an example that if I look through the gentleman and the family's gross income from the rental properties, quite easily over 2.5 million. And I sort of say, well, does it not justify to have a CFO role to review that 2.5 million of sort of rental income, is to say which one is working, which one is not working, what are the strategies?
So there's a lot to that. And when you look at a CFO, the three main functions they typically map and monitor and take charge of: balance sheet, P&L, and cash flow.
Yeah.
And all those three things are concurrent and very pertinent for all property investors. They're the three aspects of a really strong portfolio, right? What is a balance sheet, as in what are the assets? What's the P&L? What's it like to operate? And do you have the dough in order to run it? So you would corroborate my idea that a property portfolio in time, as it matures, will need to have not only the aspects of the CFO, but it may actually need a CFO to run it if it gets big enough.
And that's right. That's exactly the point, right? It's sort of the CFO role at various level. So if someone who's got, say, 4 and 6 and 8 properties, they need that sort of the CFO service for a period of time, right? For a fraction of time. But then when you have someone who's sort of very intensive property investor, you need that deeper and deeper, right? Because there's two things. One is the maintaining of that data in terms of the level of the profitability, and number two, in terms of the strategic side of it, and even in terms of how we present to the bank. Is that very often the bank that we present, very often, right? The bank that we sort of present, it's a bit of a storytelling. And when you've got all those different trusts and companies and individuals and all those different properties, is that you want to give a whole buckle of information to the bank, or do you want to present it in the nice way, saying that this is the story, this is our investment plan, so to speak, as opposed to the business plan, and this is what our strategy is in medium to longer term.
So KHI, it's an integrated practice that really concentrates on all these aspects of wealth creation, and we've spoken with some of your colleagues and partners over the previous months, financial planners, lawyers, mortgage brokers, the whole kit caboodle. So this idea of an accounting capability for the purpose of property investment is really something I want to dig down and expand. And I really want to grow this idea over time because, you know, there's also a mentality aspect of a CFO as well. It's a philosophical view of how you choose to frame and shape something. And from that, you can actually charge your decision-making from it. But I know you have some partners inside of your firm, one of them being Gary Young, who's your lead internal accounting partner, who does this sort of stuff for a living for businesses. But from what I understand, for more sophisticated property investors. So you've brought him into the studio to actually have a chat around this. Gary, do you reckon I'm off the mark with this, or am I thinking about this the right way? As in, you got to be thinking like a CFO sometimes with your portfolio, but there's going to be a point in time, depending on your skill set, where you may need to actually draft someone in to do this it's probably not a full-time job, but you need someone with that skill set and capabilities. And welcome to the show, by the way.
Thank you very much, Phil. Thank you, Munzurul. Thank you for having me. Yes, spot on, 100% is a very, very much required role. That role, as the portfolio grows, it would be more and more required. And then, as Munzurul is saying, there are multiple reasons. Like the portfolio itself, the actual asset value itself is rather significant, even comparing with the business a lot of the investors may have. If we don't have someone proper understanding it, constructing the data, and making some initial analysis and informing the owners of those portfolios, what decisions are being made about the portfolios exactly, as the Munzurul was saying. If you leave those portfolios and properties there as it is and not touching it, not fully understanding it in a timely manner, you may miss some opportunities to make some sort of major decisions about them.
Gary, the objectivity that you sort of bring in, right? Because Gary acts, and I'm happy to share that in the open world, that Gary acts as that property CFO for my own business.
Is he your property CFO, even though you're
He does, right?
accomplished accountant.
That's
Yeah.
right, he does, and he's been doing it for quite a while, right? So, see, as a property investor, is that our emotions are still attached to it because there is a story behind of buying this. We had to go through these challenges, we had to go through the bank loans, we had to go through a whole lot of things. So there is a whole lot of emotion attached to it, right? So someone like, say, Gary comes in, there is no emotion. It's all about objectivity. And Gary looks into each individual property and say, I know you've been close to this property and I know that you've got a long hope with this property. But the fact of this matter is that you look back for the last 7 years, is that the property seems to be costing you the most. You always seem to have repairs and maintenance. You haven't had that growth. So he asks those questions and challenges those questions in a very objective manner.
It's a really interesting discussion, and I want to frame this in a way in which this idea of what a CFO would traditionally do in a business, in some ways in property investment, many of those type of aspects of that role has fallen into the custodianship of a property strategist and or a buyer's agent.
Yep.
So often they're the people who are interrogating portfolios, who are asking these type of questions, looking at the P&L level, whereas accountants have traditionally been framed in this bucket of compliance practitioners and partners for property investors, as in you speak to your accountant to get your tax done, and you speak to your buyer's agent or property strategist for the purpose of planning and executing on a strategy. And that's sort of not really how it works inside a business, because the CFO is typically the custodian of that information. You often find the CFO is also a strategy lead in terms of driving organizational growth as well. So accountants have lost some of that to buyer's agents in many ways. And maybe this is actually the bastion of the CFO, the property CFO, to actually look after. I don't know. I'm just thinking out loud.
And I think it's about coexisting. And where that coexisting comes in is that where the accountant comes in is that we've got the scorekeeping. So that's number one. And number two is that how do we go into that coaching, right?
Yeah.
So both the scorekeeping as well as the coaching of the information, that's where the accountant comes in the CFO side of it. Where it can coexist is that, imagine in a world is that where it goes to a sophisticated investor, Gary already providing the report saying that, okay, this is the balance sheet, that many properties that we have, that's the asset value, that's the mortgage, that's the net value, number one. Number two, the property is costing us that much. On the basis of this level of interest, yes, we've identified a couple of interests seems to be a little bit higher. We identified this particular property seems to be quite a cash flow-wise constraining. We identified this property are costing us quite a bit. So all of those information, when they're already in there, what the buyer's agency then does is to take a step back saying that, okay, so we understand all of those. Let's put a bit more art behind it, right? So it's the science coming in from Gary. And let's put a bit more art. And the art comes in terms of diversification. The art comes in terms of what are your goals and objectives in the longer period of time. And the art comes in is that how do we all put it together into your retirement plan as well as succession plan. But what Gary's role comes in is quite fundamental, is that he gives those real nitty-gritty factual of the information, and he gives his analytic, which is traditional CFO's role.
So Gary, how do you know what to look for when you're looking, and let's use Munzurul's portfolio as an example, which he says he's happy to do so. I won't go into details or numbers. It's a large portfolio. So he's charged you to play this role as the CFO of his property portfolio. And I would argue, knowing the size of your portfolio, you need a CFO, right? Yes. Like, because there's so many moving parts to it, absolutely, right? And no doubt you would probably require a team to support the CFO in terms of if it was a business, it would have a finance team that supports it, right? So, Gary, how do you know what to look for when it comes to a portfolio to add value to Munzurul in order for him to make more decisive or better informed decisions?
Very, very good question. In terms of the value adding and servicing our clients, one of the fundamentals I always go to is we got to understand the client and what level of understanding the client already have in place. Yeah. Like to service Munzurul, as you're saying, look, I'm a bookkeeper, I'm an internal accountant. How do I service such a mega big chartered accountant? Well, number one, it's a time saving, right? Like we need to construct the data together to have the information available for him to review. So that's a very fundamental process, which we are very, very good at. And the reason we say we're very good at, we know properties We worked with property investors many, many years, and myself have multiple properties myself as well. In terms of the hands-on experience is already there. With all the experience we have from various clients, we know what potentially goes wrong even. We know potentially what information could be easily missing. We understand all the nitty-gritty, the tricks about how to construct the data, what format we put it in, what name do we call that account. All of those information is already within the organization, within my mind. We collect the data, we present the data in a timely manner. We then provide some initial summarization with all the collected data, like the raw data, depending on the client, depending on what information the client specifically prefers. Like some clients actually give us an indication what ratio they would like to have. And that itself represented from the level of understanding and certification of the investor themselves as well. So we do understand the ratios as well. We understand there are a lot of potential ratios we could calculate, provide. And when we do that, and in a timely manner, the clients loves it. Loves it in a sense they have the information in front of them. They know which one is doing well. They know which one is falling behind. And they can make so-called informed decisions.
Do you think the role of the CFO is to present the information to support decision-making, or do you think it goes further than that, and that is to actually make recommendations on the data and the information that you've gathered and being able to wrap that up in a story? And a story is what you actually need in order to support decision-making.
Again, I have that live experience. Very good question. What does a CFO do? Technically, the CFO should be in charge as well, as we say. Well, what we do as the so-called external CFO, we try to understand the situation. We try to understand the client. We try to provide so-called options. We understand in this case what is the option. In that case, scenario number 2, what the numbers look like. We actually do that with some sophisticated clients where we're not calling the shots, but you know what? Because of the experience, because of what the understanding, we understand which way you're trying to go, and we're just ping out which way it's going to have what kind of results, what kind of potential future.
Yeah, there's a lot of aspects of this, and no doubt, like most things, a relationship with someone evolves over time, and that the same would be the case with the CFO. As they become more familiar with your aims and objectives and your strategies, they're able to apply that or look at that through the lens of what data is meaningful, what information the owner, the investor needs in order to make more informed decisions, and be able to present it in a way and have the sophistication to know that everyone consumes information differently, and having that's the EQ part of actually knowing, hey, this person here is very financially literate. They make their decision based on graphs and charts and numbers, whereas other people probably less so, and they'll make their decisions based on the narrative put around it or the recommendations placed by someone. And everyone is very, very different. When does it get to a point where you actually need, let's call it, a property CFO? Like, how big does a portfolio need to be in order to actually start investing in this as a capability with a view towards growth of the portfolio, but also asset accumulation, asset protection, and with an eye towards the bottom line of the P&L?
Look, I don't think there is a definite answer to that question in a way where, look, depending on the investor themselves, like depending on how busy they are, depending on what kind of business they're running, depending on their day-to-day role, and at the same time, the portfolio, we do have clients who has 3 or 4 or 5 properties. Yeah. And it has to be a massive portfolio for us to be jumping in to help. Like, the service is on a different level. Like, it could be a little bit of like lesser service rather than a much more comprehensive service. We are running as a business. We are saying we know and understand how to do this, and then that's how we will do it. Like, what the clients need and how much they need it, we can provide the service.
So maybe Phil, 3 examples, right? So 3 examples of a client who's got about 4 to 6 properties, a client who's got about 12, 15 properties, a client who's got about 80, 90 properties, right? Now,
89.
80, 90 properties, right? Or even higher.
Yeah, okay.
Right? We fortunate we've got a number of clients who actually got over 100 properties, right? But then at the same time, we've got clients who's got just 1 or 2 investment properties. So if I rank them, not so much rank and categorize, saying that that's sort of 4 to 6, say someone has got 10 to 12 properties, someone has got 80, 90 properties, I would strongly argue that there would be an external CFO role for each one of those services. So someone who has, say, 4 to 6 properties, as an example, all probably needs is a quarterly reporting from Gary. So quarterly reporting, Gary just sends a report saying that, okay, in this particular quarter, these are the properties, this is where the bottom line profit is, this is where it is, some of the observations. So it's a bit of a light touch, so to speak, right? Someone who goes into, say, 10, 12, 14 properties, then not only a quarterly reporting, there may be a once in 6 month physically sit down meeting, or once in a quarterly sit down meeting, is saying that, okay, I've done this data analytics, these are the observation I have. And then when we go into a lot bigger portfolio as such, is that this is where we sort of sit down in a lot more periodic basis. In my case, as an example, that Gary actually sits down on a monthly basis. So the process that Gary takes is that all my rental property goes into a very particular email accounts, and Gary has got full access to that email accounts. I've got access to that accounts. If I want to just open that bank statement, rental statement to see where it is, I can see it. But Gary gets it. And then what Gary does is that puts it together nicely on a monthly worksheet. It can be either
I think I've seen
zero-based.
your sheet. Yeah.
That's right. It can be
It's
either
got a lot
zero.
of cells.
It can be Excel,
Yeah.
right? And it can be very sophisticated Excel. In my case, it's very sophisticated Excel, or it can be zero-based. Either way, that's fine, right? Both has got some benefits attached to it. So in my case, Gary has done a customized Excel. So Gary does that every month. And when Gary does that every month, Gary keeps the record. Then what Gary does is that Gary sits down with me on a monthly basis. So the first thing Gary sort of says, all right, we're going to look through the bigger picture, have a look through the entire portfolio, and where is the portfolio in this one? That's the rent, that's the bottom line expense, this is how much is it, positive or negative. Then Gary says, let's go a little bit deeper. So your structure has got a couple of different structures. So you own that on Trust 1, Trust 2, Trust 3, individual name as such, go into those individual properties. So Gary goes a little bit deeper. Then the third level, what Gary sort of says, Gary says, let's identify this property 1, property 2, property 3, is that we sort of seeing some of those level of concern. And Gary says, well, these are some of the opportunities we get, right? All of those, what it does is that in my mind, it gives pointers. So Gary may come up with 7 different things, and then I might take just 2 or things out of it, right? But those 2 or 3 is that I've never thought it through. So I probably would suggest, Gary, that that sort of role, depending on how light or how heavy the touch is that there is a wide range of service.
Absolutely.
So again, it brings you back to the original point that you need to be thinking, acting, operating like a business owner if you're investing in property.
Yeah.
Sometimes it takes people a little bit too far through their journey to realise that point, and often they find themselves in trouble or distress as a result of it. So no doubt, Gary, that the best portfolio is built around long-term sort of planning and capabilities, and in many ways that is the role of a CFO in a business. What's your sort of interface with, say, Munzurul, who's on the front line working directly with clients, and or maybe buyers agents you're working with, and or your very strong broking operation within KHI Partners? Do you work with those other stakeholders as well to actually shape and craft, and rather than just worrying about the now and providing a reporting function, which is important, looking ahead down the pathway and actually identifying areas that you need to mitigate against moving forward? Yeah,
look, absolutely. We do have work with very closely with all the other departments within KHI Group, and the role itself has many, many merits to it. Munzurul sort of touched on that already, in the sense, look, again, I'm picking it up and repeating it almost as well. For example, in terms of the information, it's not only for show for the owners and investors as such. It can be a compliance requirement from the bank.
Yeah.
They may need it. They want to see it. They may like the presentation as well, and it's very, very clear it will provide value for the approval of the finance. And this is the so-called part of the so-called management accounts. Like sometimes the tax return is not done on a yearly basis, like a 4, 5, 6, 7 months after the end of the year. Well, this part of the paperwork is already there. as part of the ongoing exercise.
Maybe explain to our listeners who might not be familiar with this what the difference is between statutory accounts and management accounts. And people in business will be very familiar with these terms, but maybe people who aren't less so. Most property investors' relationship with their accountant would probably be their statutory accounts, what gets lodged every year and submitted to the ATO. You also have your management accounts, which runs in parallel with that.
Yep.
Which is pretty much the day-to-day operational visibility of your organisation, this being a property management ownership business. So maybe go into a little bit more detail for people about how management accounts work.
Yes. Management accounts is a very, very big role for our business. And management accounts is today's word. We're using a lot of technology within the systems we use. What are we doing? Not only we are providing the traditional normal P&L with the normal chart of accounts, management accounts these days, what do we do? Depending on the level of the client, depending on the level of the operation, we are actually customizing the traditional P&L to the owners of the businesses to show them how the business is going. I'll give you one example. There's one large client we have. We provide the management report in the format of departments. There is Department 1, Department 2, Department 3. There is the income. There is a direct cost. In the direct cost, you can have a different level of details as well. And what that does, because we do the day-to-day accounting, and then we customize that report, we present that report to the managers, to the owners of the business, and then they understand, even for their KPI reviews, it's right there, loud and clear. Every single line got its own justification. Every single line got its own allocation details to be reviewed by anyone. That's how a management report works. And then the management report is to monitor how the business is going. Mm-hmm. It's not just the bottom line. It's by reviewing the management report. Obviously, one of the major benefit of that is when it's a large enough operation, I suppose, which department is doing better, which department is doing not as good, and what's the wages look like comparing as a ratio to the turnover for that department. Many data analysis can be provided, have been provided. That's the management report.
And Gary, this is the traditional that, as we always sort of say, you're sort of the traditional accountant, the compliance accountant, as opposed to the strategic accountant, right? Statutory accounts are the tax return and the accounts, so to speak. It could be very compartmentalized in the sense that you've got a trust and you've got few properties, you disclose this as such. That's fine. We need to know this, right? But as an investor, we also need to take a step back and say that set aside all those sort of the corporate veils, so to speak. I want to know all my properties, where all my properties are, and where all the numbers are. So I need to look into that bigger picture. That consolidated basis is what we can do. And then what we do is that we go a lot deeper into it, right? Yep. We sort of identify saying that, look, your portfolio doing very well, or your business is doing very, very well overall. But if you look into this particular department, that's still doing pretty poor. And if you take that out, then your business is doing even better.
Yeah, and the way to frame it, and again, for people who are property investors tuning into this who might not sort of be involved in the finances of the business they operate or their own business themselves, you talk about departments and the performance of departments and going down to a P&L level of a department level inside a business. You just frame those departments as each individual property. Each individual property has its own P&L and they're all contributing to a greater P&L. So if your role with your accountant is very much a compliance regime at the end of the year in order to do your tax return, and you may have a couple of properties, you may not, you're probably missing the mark. You've got to be looking at this thing hourly, daily, weekly, monthly, with a degree of rigor, which is going to be completely connected with your sophistication as an investor and your appetite for growth, but then also knowing what numbers are meaningful. I've seen a lot of people's property spreadsheets, and you go, yeah, that's all nice, but it's not really supporting decision making.
Yep.
So you've got to dig down, and management accounts is not like a template really you can use. There's some basic fundamentals you can use, but most management accounts will be unique and specific to the person and or organisation that they're working within. That's going to be the nuances of how they go about their business, and we're talking about property investment here as a business. So no doubt they can lean on you, Gary, for some basic understandings of what numbers are meaningful, but the management accounts, which is your essentially your plans for steering your organisation moving forward, is going to be unique to where you're going and how you're going and what's next for you. And this is when you start bringing in all the nuances of being a property investor, like, are we one income? Are we going to have two incomes? Am I going to pay rise? I'm not going to get a pay rise. How do I forecast future cash flow based on potential interest rate cuts? Like the best investors I know have already got that mapped out. Yep. No doubt you've got it mapped out, Munzurul. You probably know exactly what's going to happen, if there is any sort of interest rate decision. But again, it comes back to the point, your management accounts is it's unique to you, and you need to use it in a way in which is unique to you, Gary.
Absolutely. Yes.
And a number of things, Gary, in there, right? Because say, if we look into the risk mitigation side of it, to give just a couple of examples on the risk mitigation, a traditional challenges that the property investors, what we do is that we buy one or two properties, we draw down the equity to buy another property, draw down the equity from the third property to buy a fourth, we go back to the first property, we draw down equity again to buy the fifth property. Very quickly, that sort of continuous equity raising, it becomes very cumbersome.
Yeah.
Right? And how do we keep track of all of those sort of cumbersomeness? They're all deductible because they're all being used for an investment purpose, but they could be into different vehicle. And if we don't do it in the right way, there is a risk that ATO will come in and say that, well, nothing is deductible, right? This is where Gary's sort of the work comes in quite helpful, right? In terms of keeping track of all of those on an ongoing basis, having that bit of the audit proof that if there is a review, yes, these are deductible, these are the reason why they are deductible.
So we're still talking about how do you curate and synthesize information to support better decision making, and I completely take the point. I don't know if there's a term or phrase for this, but like this idea of every property investor at a period of time will need a CFO in some capacity. What we're talking about here is not a full-time CFO. We're talking a fractional CFO. I think that's a term in accounting space where you have one accountant who might service 100 people one CFO can service 100 people because not everyone needs, I don't know how many hours a week an accountant works, probably 60 hours. But so it means that you can get you get a little bit of someone who is highly skilled and capable to help you down this pathway. And I would argue that most, unless you're probably Munzurul, but most property investors probably need a part-time CFO to act in this capacity. So I'd explore that discussion. But again, that's more of so we talk about compliance, that's one aspect of it. This is about the management accounting and the strategic formulation of information and numbers to give you better decision-making power. But then there's this other aspect we spoke about very briefly, Munzurul, and that is being an engine of the tool for storytelling to help secure finance. This is when you really need someone in your corner that knows financing, knows your numbers, and knows how to importantly present information to satisfy the needs of lenders. And from what I understand, you get to a particular point in time when it sort of becomes irrelevant how much what your serviceability is. Is it like it becomes a threshold that you pass where lenders start seeing you differently, and they start seeing you a lot more sophisticated, particularly if you're working with the private banks, where they will say, okay, we'll give you the money.
Yep.
You know you're responsible for it. Yep. Yes, you go away and do what you want to do. And in many ways, you're going to need a really good property-related CFO to help you craft that to present to a bank for that purpose.
Absolutely. To give you one example, just one example, right? Bank has this concept called deleveraging strategies. Yeah.
Okay.
So, and what the deleveraging strategies effectively means at a high level, and this is coming in as an accountant, so I could be a little bit off in terms of the financing term, but deleveraging in the sense that you go through, you do your traditional level of serviceability, right? What's the traditional level of the serviceability? You have your normal interest, you add away a couple of % in terms of the risk factor. You assume that everything is P&I, and you assume that everything is on the remaining term of the loan. So very conservative, right? On the other side is that you also assume that the rent is about 80%. You take away some of the expenses. So your real rent could be 20 grand, but the bank is only taking 16, and they're adding the expenses. Your actual payments could be only about 12, but the bank is taking a lot higher. So when you do that on a very conservative manner, is that you come in with a number which could be negative.
Yep.
But that's the bank's formula, right? But bank knows that, yes, okay, it's negative, but it's negative on a very conservative basis. Now, if we, as a property CFO, from our point of view, is that when we go through and we say, okay, we understand you'll be doing that math, but let us give you the true number. This is what our true number is. This is where we're sitting. We're actually sitting as quite positive. We can do a bit of a synthesization of with these numbers. We take away about 10% of the rental return. We're still looking in there. But even if we are negative, then what we justify on the deleveraging strategy is to say that, well, this particular client has got that many properties. I'll make it up. Let's say 20 odd properties the client has, right? If things goes wrong, the client can sell this one property. Client can sell this one property. Client can sell this property. This a particular property, if we sell it, is that pre-tax, we're getting about 300 odd grand as sort of after payment of the loan, as well as all the rest of the incidental cost. You've got about 100 grand sitting in here as a negative, but in here, there is a strategy that if I do sell it, I would have 3 years of that negative being covered. Now, at the end, it is on bank's decision whether they accept it or not. But what you're doing is that you're giving them an alternate storytelling, saying that we understand the conservative basis of bank and we respect that. But this is what the true story is, and these are the potential. But that comes in from keeping the record in the right way.
So in that example, then you can continue to, when you get to a particular point and you have that sophistication to be able to present information, but also have the capabilities to service debt, you can start securing finance, which is contingent to liquidating assets in order to service
As
debt.
an example, right?
Yeah, so that's becomes common. That's sort of,
as an example. And there's many other strategies, right? There is a particular bank, as an example, they do asset funding.
Yeah.
Asset funding in terms of a large sophisticated investors. There is a particular bank which sort of does the refinance and sort of very lower level of sort of the buffer, so to speak, right? So it's about knowing all of those intricacy in terms of the funding. But it again comes back to Gary in terms of one is to knowing it, and number two is to connecting all of those in terms of the data. You know, I speak very often that we speak about the business plan and ask very often to a client, what is your investment plan? What is your property plan? So every particular property that you buy right in day one, when we speak about the exit plan, is to know loud and clear. It's not just buying it for the sake of buying it. Why am I buying it? Am I buying it because of cash flow? Am I buying it because of the equity growth? Am I buying it because I would renovate and sell? Am I buying it because I'm going to subdivide and build something at the back? Am I buying it because I'm going to build a granny flat behind it? Am I buying it because I know that there would be some rezoning behind it? Am I buying it for any other reason, right? It's about knowing that reason. That's the art of this story. And then we add away the science behind it, which are all the true numbers, right? In the business, as an example, sometimes we look into a particular department and we say, it's a cost center, right? So we know it's costing us and we get it and it would never be profitable, but we need this. Why do we need this? Because what it does is that it just creates all those other profit-making center. So we're going to live with this cost center, but we live with that in a very informed manner. And that's where the property CFO comes in, is just being as informed as we can.
How'd you end up in accounting, Gary?
Accounting, as a lot of Chinese potentially overseas students are, is one
So
of the
you came out to
professions.
Australia to study accounting?
I did.
Yeah,
I
okay.
did.
Wow. When was that?
I came in Australia 2000, and
How old were you when you arrived?
I was 20. years
20,
old.
wow. By yourself? No friends, no family?
I did come with all my family.
Yeah,
In actual
okay.
fact, yeah.
Yeah.
Lucky one.
Into Sydney and to start an undergraduate degree in accounting.
Absolutely.
Yeah. And did you enjoy it?
English first, in
English
actual fact.
How was your English when you arrived in Australia? Was it?
I was quite okay within my class back in China.
Okay. But you come out here and went, oh, hang on.
No,
Yeah.
I can't even answer a phone call.
Yeah.
That's how
Right.
bad it was.
But you must have got your, what is it? English as a second language rubber stamp so you could study at university. But,
That's right.
you know, but the numbers are the same. A dollar is a dollar, right? You know, it's a spreadsheet's a spreadsheet. So accounting degree and then went, I'm going to become an accountant. That was the plan. And yeah.
Yeah, look, I was actually have a little bit of business mind, I suppose, all along as well. I did accounting because accounting is a profession to get me a job, a decent, like people have that view, I suppose. Accounting is a good profession, and then that's the reason to get into accounting. But when I was doing the job in the first few years, look, I guess, is this really what I want to do? I mean, I did have that moment as well. And later on, I actually got into myself with a importing business
Okay.
with some shareholding. And then I did some quite a bit of journey in terms of going through that journey with all the paperwork handling, with all the delivery or the stock, with actually warehouse part of the role as well. So that gave me quite a bit of, I suppose, the commerciality of the Australia society, I suppose. Yeah. So, and then I had my own practice in terms of accounting, internal accounting, and then we partnered with Munzurul all the way.
So how did you guys meet each other?
9 years back.
What's the back? Because I've known you for years. I've known you as long as I've known Munzurul. How did you guys interconnect? There must be a story somehow.
It was a mutual client. It was Munzurul's client. I was telling the client, look, I might be on the urge of looking at some more work. And you know what? With as Munzurul and Trevor as well, in a way, at the time, they actually, I suppose, found me, headhunted me. And then later on, I learned Trevor's mind. Well, if Gary is able to service this client, this is a very difficult client. He must be all right.
Yeah. That client wasn't me, was it? No.
No.
Not at all.
So you joined KHI through that, and now in many ways an engine as a lead internal accounting partner. So you actually synthesize this. You have internal accounting partners, you have bookkeepers, but you also have accountants. So they're all slightly different, Munzurul.
It's amazing how, the whole profession sort of changes, and you need to be adaptable with time, right? So when Gary joined us, Gary probably about 8-10 years ago, or a very long period of time, Gary is one of the very early sort of partner, right? Gary was on that bookkeeping role, and he joined at that sort of a bookkeeping role, right? And Gary, like, great bookkeeper, fantastic, all the rest of it, right? But very quickly we sort of identified that many of those bookkeeping roles are becoming a lot more automated, right? A lot more technology based, and more sort of technology coming in, and it's just not competitive enough, number one. And number two is that the role is so limited. So I look back into Gary. Gary is a full CPA, lots of qualification behind it. So he's just so much bigger than just that sort of data entry as such. And bookkeepers are great, but just sort of data entry. So this is where we went back to Gary, saying that, Gary, we can look into a lot deeper in terms of the internal accounting role. And internal accounting is more than a bookkeeping. This is where you're actually acting as a CFO, as an external CFO. So Gary, we spoke about the CFO on the property side of it, but on the business world, Gary speaks about, stays as an external CFO of some of our very, very large client.
Yeah, okay.
Very, very large client that he stays as a CFO. So this is where that whole sort of the bookkeeping journey evolved in the internal accounting. So Gary, a couple of your larger clients, as an example, you look after many things, yeah?
Absolutely, yeah. So the change of the from bookkeeping to internal accounting is the right way of justification of the qualification, of the capability of the understanding and delivery of the management accounts. So I am like providing a lot of services to some large clients in the construction industry. Even there is a very large client of ours in the commercial cleaning industry. And, we have also large clients in the retail industry as well. So those clients, we are acting as their accounts receivable, their ears and their eyes, and we are providing the day-to-day in addition to the analytics and communication. The communication comes very, very heavy as well, because we do need to understand and interpret the data. And as you say just now as well, Phil, like, look, I know the spreadsheet is there, but what does it mean to me? And, well, the spreadsheet and the reports we run within the meetings with the clients, we translate that into a meaningful meaning to the client, a simplified meaning, so they understand the numbers.
Translation's a key point, because a lot of you can have all the best information in the world, and unless you can interrogate it as a business owner, a property investor, the information is meaningless. So sometimes you need a translator. Sometimes you need someone who can synthesize it and deliver you that information. And that's very much what really good CFOs do. So, the bookkeeping aspect of it, and bookkeeping is being, inverted commas, disrupted. The function of a bookkeeper is a really, really important function. That is getting essentially it's getting information into the system, right? So you can actually utilize that information. So technology is changing the way in which bookkeepers operate. There's also a lot of capabilities and some very strong capabilities that a lot of Australian companies using through offsourcing, where they use a lot of that bookkeeping function is done through offshoring. I don't know, Munzurul, I think you have operations in Manila. How do you, which I think is great, and some great capabilities out there. You need to get the information in the system, but are you best off having an Australian-based capability doing that? Probably not. There's a lot of technology around it. But how do you sort of balance this idea of like the cost efficiencies with that versus sort of protecting of client data and all that sort of stuff?
Absolutely. I'm so glad that you asked this question, because it's one of the questions that we pondered for literally 5 years, 7 years before we made this decision saying that we're going to go with this group, right? It's a group that we go through, is a group that's being used by BDO and Grant Thornton and PwC, some of those really largest sort of a group. And data security is absolutely fundamental. So even basic rules such as that they've got this closed work environment and they've got the PCs and laptops in there, that you can't take away those laptops out. These are LAN system, right? As opposed to being sort of having the internet as such, you leave your mobile phone outside and you really work within that sort of a closed environment.
So it's fully contained.
Absolutely fully contained in sort of the way you do. So that's a fundamental, right? And then we've got a whole bunch of safety and security system from our point of view in terms of the portal and all the rest of it. It's so crucial in so many different ways, so crucial. So the group that we go through is that if I look back with the pricing side of it, are there groups which are cheaper than that? There probably are. There are many others, right? But we actively went with this group knowing that this is being tried and tested over the years, and that bit of the data security in there, fundamental.
And capability, so if your Grant Thorntons are using or some of the big four, I imagine the capabilities of the practitioner at the end, the offshore end is pretty good. Do they have, some of them even have Australian qualifications?
Oh, 100%. I mean, to give you as an example is that just recently, we've got a very large client who sort of approached us saying that, well, we need you to take over the assistant CFO role from our point of view. So what do we need with the assistant CFO? These are the tasks. We need to do the payroll. We need to do the receivable, payable. We need to collect some of the cash. We need to do day-to-day reconciliation, monthly management accounts, and all the rest of the things that the assistant CFO sort of does. So we've got a partner involved, and the partner is sort of looking after. But then what we did is that we recruited this member in overseas. Now, this member's background is that she was involved with the audit division of PwC for a number of years, Australian audit division. So she has got all the qualification in Australia. So some of those Philippine young ladies and the gentlemen, they're very qualified, right? And English is good. Timing is good as well, so they're pretty good.
Well, it gives you bandwidth, right, and allows your Australian-based capabilities to be really client-focused and engaged and connected. No doubt, Gary, you're on the phone all the time chatting with people. How do you? It's sort of because I'm not an accountant. I don't have an accounting degree. I'm comfortable around accountants and accounting. How do you sort of measure, or how do you give sort of sense for? How do you grade yourself on whether you're doing a good job or not? How does that work in the mind of an accountant? Is it black and white, or is it, sometimes a bit grey? And our accountants don't like grey.
I love that question, right? Look, look, how do you grade yourself as an accountant?
How do you do it?
We do joke around about these kind of questions a lot. And what I have been doing, I share this a little bit of journey as well, in a way. Like, I was a bookkeeper myself, doing the original data entry after uni. What do I know at that time? I know nothing. So we put an account called suspense. Everything we don't know, suspense. Everything we don't know, suspense. And then I grow. 4 or 5 years in, I say, look, I know all the transactions. I see the bank account. I know what the clients are paying for. So I start allocating.
Sorry, I don't understand.
So
Sorry,
I allocate
someone's phone.
allocate that to the red accounts. I believe it's correct. So that's 4 or 5 years in. Well, 6, 7, 8 years in, I said, look, who am I making all those assumptions and putting all the allocations that way? That's not correct. Could be. Did the client okay that? Did the client agree with that? So what I'm doing these days, I'm providing a query process with all the clients. Even though I think I know, even though I think it might be that way, you know what? When it is material enough, when it's large enough, I'm going through that process with the client. I'm understanding, I'm explaining to them technically, I'm finding out more technical answers to the client, for the client, to say, okay, this is the transaction, this is the situation. If it is for this purpose, based on your business, it is tax deductible, it is a business expense, or maybe it is not. Can you please explain to me a little bit more about the situation you are making this expense? So I'm going back to the same frame. I'm trying all my best, providing a service, allowing the client to be informed and making an informed decision.
Yeah. I suppose it's about being accurate to start with. That's the fundamental, right? Number two is to stay absolutely compliant with ATO.
That's right.
Because
yeah.
anything which we do it with
Very
an
important.
assumption that there would be a review from an ATO externally, staying compliant to it, and then going a little bit deeper rather than just being compliance is that it's a mutual challenge, right? We challenge the client saying that these are the things that we've seen with all the right intention, right? And at the same time, asking the client, what is their priority?
Yeah.
Because sometimes client may say, I'm hands off, take away the time from me, right? I don't need to get involved and everything. We do that. Sometimes the client says that I want to stay very hands-on. I want to understand every single thing as such. So not to provide a solution, provide a solution which is right for this particular client.
I would say, how do you know whether, as an accountant, you're doing a good job or not? It's whether or not your client actually wants to take your phone calls. So it's true, like
Sure.
your relationship with your accountant or your CFO is a pretty important relationship, and it's got to work. You've got to like each other. You've got to get on professionally at least, but you actually got to enjoy working with the person, because if it's got friction in the relationship, it can be a miserable existence, sort of working through some of those things you spoke about. So, make sure you like your accountant or your CFO, and make sure they like working with you, because if not, it might be a different person you got to work with. Everyone's wired differently, right?
That trusted relationship that we say, and we sort of say that accountants need to work as your safeguard.
Yeah.
Right. And our safeguard, in the sense, we say that very often to our clients, that we are your safeguard. Safeguard means is that whenever you make a big financial decision, we say, run that through with us. Just before you make that big financial decision, run that through. And what we will do is that we'll give you a very objective view of listen to all of those different things on the basis of this. These are the positive, these are the negative, this is where we are, this is where we are, right? That's our role, is to give that information. But if we see, you feel, as an example, you're doing something which is sort of, there is a bit of danger in there, we have to identify those danger well in advance. That's our role.
It's a very important role. And if you think back to COVID, which is, the onset of which 5 years ago was around this period of time, accountants were in many ways the doctors and nurses of Australian business through the COVID period. And you saw then, and I think it was real inverted commas coming of age for the accounting profession, because people, whether they're property investors or mum and dads with PAYG incomes or SME business owners, the accountant was the person they were speaking to the most through that period of time, and they were counsellors, they were confidants, they were business partners, helping people navigate and steer through that. And we saw then this notion of the trusted partner. They were the trusted partner. They were the trusted partner to government. And the government leaned on the accounting profession pretty much to help Australian business navigate the COVID pandemic. They were the interpreters and the executors of a lot of the government stimulus coming through. Like, accountants had to upskill really quickly to get on top of that. Do you remember these times, Munzurul?
Absolutely.
Yeah.
And it was so important at that stage, is that, again, just that relationship with the clients and to maintain that relationship, right? If I look back to my client side of it, is that, yes, okay, we need to do the accounts and the return and all the rest of it, right? I actually say that all my best friends, they were all in day one. We start saying that they were strangers. then some of them were clients, and some of them were really good clients, and some of them were like really, really good clients. A couple of them became friends, number of them became really good friends, and then some of them become our best friends. So all my best friends in day one, they were actually clients. It's not the other way around. That is, we haven't started the business with our friends saying that, well, can we do your
To do
accounting
business,
side of it, right?
yeah.
And that's something I look back and I say that, wow, we take that with a lot of gratitude. It's sort of almost we are in a journey with our clients throughout that whole process. Like Gary and I, as an example, that today we were discussing a large client of ours is that went through a couple of challenges, had few family issues. We navigated through that family issues together. The client is fine now. And then now is that going through a whole lot of financial reason. And Gary the other day came in and said that, Munzurul, we need to spend time with this gentleman. I was sitting with this gentleman and he literally burst into crying because of financial circumstances. So the first thing Gary does is to organize a time. We say that we will sit down. And when we go into this meeting, we'll set aside all the financial. We'll really speak and we'll try to really listen to the client. We'll speak to the client. We'll try to connect and reconnect. And then we'll say the numbers has to come in. So the right accountant are so much deeper in terms of the relationship.
Well, problem shared is a problem halved, and no doubt a lot of people, when they tell their accountant, it's pretty much permission to help, you know, and sometimes it needs to be retrospective help, or sometimes it could be proactive help. And we're talking about property investment and how you can, you know, leverage these idea, notions, philosophy of the CFO and the capabilities of someone like Gary to actually do this, which is pretty important. It's important, your relationship with the accountant. Always enjoy chatting with you, Munzurul. I always get excited once we get beyond sort of compliance matters, which only sort of absorb maybe 10% of our discussions. We're always talking about the strategy, the what's that like, you know, in many ways, you know, providing those skill sets and capabilities of a CFO to help me shape and craft my property investment, my wealth creation journey as the custodian of it. I'm the CEO of my wealth creation journey, you know, and someone needs to take charge. The best CEOs, if you're a property investor,
100%.
are those which can actually get the right people around them to make those decisions.
You know, it's about that mutual sort of the ideas and the intellectuality and the share of the thought process, so to speak, right? And very often is that when you just explore all of those, you pick up a whole lot of things. I learn a whole lot of things from you on an ongoing basis, right?
There's nothing to learn from me, Munzurul.
So much I learn on an ongoing basis, right? And very often it's just an idea, and you may not absorb that at that stage, right? But it sort of challenges that, and when the right time is, it sort of fits in.
Yeah, it's and again back to the point, you know, if you're a property investor, and for a lot of Aussies, if they're not in business for themselves, say they've got a good professional job, PAYG, so pay-as-you-go income, as in you receive a salary, property investment is the great side hustle for most Australians, is where you can actually be a business owner by creating your own wealth creation through property investment or other asset classes. You're in charge. You're in charge.
A typical calculation, which I do very often sitting down with the property investor, is to say, all right, okay, you've got about 4 or 5 properties you bought it over a period of time. Sort of maybe not a whole lot of things happened, but you bought those sort of property, you bought it at that stage, this is where it is. And what are the values? I don't give them any values. I say, what was the purchase price? I purchased that at this price. Okay, what's the new value? The new value is this. Okay, so how much you bought? I bought it for 500,000. And what's the value after, say, 7 years as an example? And the client may say, oh, it's sort of sitting about $1 million at this stage. Round figure, right? And I sort of say, okay, so you bought it for 500,000. There's some incidental cost. We get it. And you saying the value is about $1 million. So you actually made about 500,000, take away some incidental cost behind it. Let's make it about, 7 years round figure. Let's make it about 420, 450 is what he made. So if I divide 450,000 over 7 years, I get about 60 to 65,000 growth per year. And because they are unrealized, there is no tax attached to it. Then I sort of say, just imagine if you had 3 of those, then you've got a 200,000. And then we go back and say, what was your salary? I'm doing pretty well. What is the salary? I'm sitting at 200,000 at the highest marginal rate. So for you to work 40, 45 hours, right, for you to be earning that 200,000 on this side is that you've earned that amount of funding literally just purely with passive investment. Then I sort of say that, well, if that is how good it is, how important it is, why aren't we having the due care on this? Why are we keeping this particular property as just buy and hold and almost forget, as opposed to actively what else can we do? But again, this is where your day-to-day communication and the CFO.
Are you talking to me personally then, Munzurul, or is that to everyone? Because it sounds like it was directed at me. But again, that's why I like doing this podcast, because it makes me just go, maybe I'm not doing that much. You don't only do accounting, Gary. What do you do when you're not accounting or CFOing?
We do love to have a bit of travel.
Okay.
Yeah, with the family, we do travel, and we've been traveling last consecutive few years, and it's been brilliant. And
do you carve out time every year to travel?
My apologies?
Do you carve out time every year to travel?
We do, but I definitely have my laptop with me.
Don't do it. Where's your next trip to, Gary? You got a plan yet?
Yeah, the missus is planning somewhere in Spain, I think it is.
Oh, lovely.
Yeah. Very nice.
Lovely.
It's good to get away. It's nice. The traveller.
And you were in Japan and China and a couple of places as well this year. So
Yeah.
That's right, yes.
Why not? You can do it, no doubt. I imagine.
It's amazing.
I'd like to see his travel spreadsheets. Probably. It's good. Well, thanks for coming in, Gary, and thanks for allowing me to sort of verbally explore this idea of a property CFO. Like, this idea that if you're a property investor, you're the CEO of your destiny. You're in charge of making the decisions. CEOs make decisions based on information provided them by key people. So this concept of a CFO for your property portfolio, I think it's worthwhile. People sort of and you've tuned into this and sort of framed your thoughts and ideas around that. That's my job done. It's our job done today, because if you think about it earlier, you might not necessarily need it. You could probably DIY for one or two properties, but it's going to get to a point where you want to amplify your investments. You need to draw in the experts. So, give these guys a call if that makes sense. I sort of do it. I sort of do it myself. I sort of lean on you, Munzurul.
You do it very, very well.
Sort of.
Very well.
I'm a bit weird with numbers, but that's good. But Munzurul, what's the best way to get a hold of all the myriad partners we've spoken to at your shop now? There's is there any left? There must be. It's got to be more coming in.
We've been very, very blessed with all those different level of services that we have. Our admin accounts, admin@khipartners.com.au.
Yeah, good.
Or hello@khipartners.com.au. Our website is khipartners.com.
Pretty easy. khipartners.com. And Gary, I know we've done stuff in the past, and thanks for all of your support and help. As I continue to do a reasonable job as a property investor. Again, this has reconnected me with I got to do more. I reckon. I got to do more. It's time, Munzurul. It's time. I hear there's a good buying down in Victoria at the moment. Don't tell anyone.
The rental returns are doing well, and the prices seems to be oof.
So give me a sense of that really quickly. So the yields are pretty strong in Victoria for resi. What are you seeing on the commercial front in terms of yield? Like, everyone's always chased commercial yields. Have they come back a bit, and there's sort of it's starting to balance out a little bit with the right resi purchases?
I think there's a whole lot of a development in terms of understanding and re-understanding what that commercial market is. There was a point of time is that we used to say commercial properties is all about cash flow, and unless and until you've got a positive cash flow, do you have it, right? But then I think that whole concept sort of expanded quite a bit, saying that, manufacturing growth, as an example, that we used to say, well, you can only have that with the residential. But we learned that particularly in the last few years, and relearned it, that you can create a manufacturing growth in commercial properties in many ways. What you can do in the construction, you do it with the lease negotiation, as an example, right? Your sort of mezzanine floor, many different ways that you can do with the commercial property, right? And we sort of look through and we sort of say, well, the interest rate of the commercial property and the residential property, they're not so different anymore, right? They may be still touch bit high, but they're not really that significantly high. And then we sort of say, well, residential property, we sort of get about 4.25, 4.5% gross. And commercial property, has it come back a bit? It has come back a bit. It's still sitting about 6 to 6.5.
Yeah.
So I suppose the question that I ask is that, am I into residential? Am I into commercial? And I think there is a time and place for both, and both has merit, and both brings in terms of your balanced portfolio.
Okay, maybe a podcast just on this at time. But it's Munzurul Khan and Gary Yang from KHI Partners. Go and check these guys out, khipartners.com, or you can get in touch with the team there, hello@khipartners.com.au.
Yes, please.
Correct? All right, nice one. But this is In the Balance. Thanks for tuning in, everyone. We'll see you again next month. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.